The US dollar bull trend is our main focus of this video analysis. My name is Chris, and we're going to take a look at the market here with Admiral Markets. Euro dollar, pound dollar, dollar yen, and AUDUSD is our core focus. But first of all, I have to explain that this session may not be suitable for everyone. To get the corresponding info on charting conditions and other details, take a look at admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity if this video analysis is appropriate for you. Also, please be aware that trading for exchange and global financial markets is considered high risk and it may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this video analysis is for educational and informational purposes only. So thank you for your attention on those two disclaimers. We have good webinars lined up here at Admiral Markets for you this week. As always, on Monday we have the weekly FX recap and Wednesday expert advice. And then we got Tuesday, Wednesday, and Thursday live trading labs ranging from price action at pivot points, intraday trading, and moving averages. Thursday, we have learning technical analysis for long-term profits, and Sunday, swing point indicator presentation. Starting with the euro dollar, we see another bearish candle last week. Actually, last week in the video analysis, I was looking at the downside trend continuation, and indeed that materialized strongly. So same scenario as last week now for this week, basically looking for more downside, and would not expect any break of last week's high, for instance, especially if you look at the pretty big bar in the weekly chart. But if we then zoom into the daily chart, then you see an even bigger daily candle compared at least to the previous daily candles. Now we're already in a downtrend, but if you get such a big daily candle within that downtrend, it is usually speaking a very massive signal for more downtrend continuation. So definitely bearish, definitely looking for more downside. The question is, how far could price retrace basically before continuing with the downtrend, in my opinion? And if I put a fib on that daily candle, 38.2 fib, like the 130 for instance, round number that broke and is now resistance, could be such a place for the minus 618, the target at 127.75, for instance. That could be a scenario that could play out. 127.50 is a target, is a level to be aware of and careful of, because it is also not only a minus 618 target, but it is also a bigger support level on the weekly chart. So that is roughly what I'm looking for here at first. Now, it doesn't mean that 127.50 will be the turning spot and the end of this downtrend. Certainly not. There's if that price level breaks, there could be even more space to 125, 120. I would just say it's a stalling spot, probably for more downside if we look at the bigger overall momentum and the fact that bearish momentum and the fact that we broke this rising wedge. On the hourly chart, therefore, things to look for are once again the 38.2 fib, but even trendline breaks like this, for instance, are interesting potentials. And if we get a break of the bottom, for instance, looking for more smaller bear flags for that downside to and towards the 127.50, 127.80-ish. The cable, or the pound dollar, in other words, is looking just as bearish, basically big bearish candle last week, just like the euro dollar. And here too, the next support level all the way at 158.50. Obviously, the round level of 160 is something to be aware of. That too is a support level, but we're still 200 pips away. So looking bearish here too on the pound dollar, and with the break of the 162.50, excuse me, and also the 164.60 levels. Those all broke, and we're looking for more downside continuation. You can see here all of those levels breaking. So just like the euro dollar, basically any of these fibs on the 4-hour chart, for instance, from top to bottom of the breakout here of this particular consolidation that we had last week would be something to look for. 38.2 fib, the 50, for instance, would be logical. Retracements levels, even at 23.6, could be bouncing spots for more downside. As I said, 160, 160.50, and eventually 158.50 would be targets to look for. Now, despite the euro and pound dollar downtrend, the dollar is not gaining against the Aussie. So we are seeing also therefore trends on the euro odd and pound odd bearishness, but the AUDUSD remains in a consolidation. Last week was a bullish candle, and the last 4 or 5 weeks have been basically stuck in between a range of 130 pips, and that range is stuck within a range of 250 pips. So a lot of consolidation on the AUDUSD, looking for a break of the top or bottom primarily before before getting interested. The dollar yen is different. The dollar yen is getting some upside momentum, is approaching the 105.40-ish, 50-ish top, and trying to break through it. Obviously, if we get a breakthrough that, there could be tons of space to the upside. 111, 120 are targets to think about potentially. Until then, we don't know for sure. This is looking like a big breakout of a trend line here, monthly trend line plus monthly top, but we need a bit more confirmation. However, from a weekly perspective, we can see that there is certainly momentum. Momentum was here to the upside and a bit of here, and now we're getting momentum again. From a daily perspective, you can see it a bit better. So yes, if we push through the red line, great. If not, we're pausing right at it, so have to be a bit cautious. But looking at the momentum here on the daily chart, there seems to be a considerable chance that a break eventually will happen. Question is when and where, but from a weekly chart, that break would be certainly interesting when it does occur. Thank you so much for joining us today on the video analysis. Hope to see you in one of the webinars at Admiral Markets very soon. Hope you enjoyed my analysis that I always do for myself. So thanks for joining again, and see y'all soon. Cheers.